Welcome to our Euro to Swiss franc analysis report covering the period from September 22nd to 27th, 2025. In this presentation, we'll examine the recent performance of the euro against the Swiss franc, analyze key technical indicators, and provide both short-term and mid-term outlooks for this important currency pair. Our analysis incorporates data from multiple trusted sources including TradingView, investingLive, Forex, Forex.com, and DailyForex. Let's dive into the current state of euro to Swiss franc and what traders can expect in the coming weeks. Looking at the euro to Swiss franc market overview, we can see the pair has demonstrated relatively subdued volatility during the analyzed period. As of September 26, the pair closed at 0.93380, showing a modest daily gain of 0.11% but a slight weekly decline of 0.07%. The pair has been trading within a narrow range between 0.9325 and 0.9350, reflecting an ongoing balancing act between the euro and Swiss franc. Both currencies have shown strength against the US dollar in recent sessions. The technical landscape presents a predominantly bearish bias on the daily timeframe, with moving averages signaling sell indications while oscillators remain in neutral to sell territory. Several significant developments have influenced the euro to Swiss franc pair during this period. First, regarding ECB policy stance, multiple officials delivered speeches reinforcing a cautious approach to monetary policy. ECB Scicluna explicitly stated there is no preset plan for rate cuts, warning that premature easing would be tempting fate. On economic indicators, the Eurozone showed mixed signals with improved ZEW economic surveys but slightly weaker industrial production and concerning German retail sales data. Meanwhile, the Swiss franc has maintained its position as a safe haven currency, though recent US dollar to Swiss franc price action suggests a potential corrective bounce with analysts noting a massive hammer pattern forming on weekly charts, indicating potential confusion in Swiss franc pairs. The technical analysis of euro to Swiss franc reveals several key patterns and levels. Price action shows the pair trading in a compressed range between 0.9325 and 0.9350, with small-bodied candles indicating indecision among market participants. This consolidation pattern often precedes a more significant directional move once a catalyst emerges. Key resistance levels are at 0.9350, 0.9375, and the psychological 0.9400 mark, while support can be found at 0.9325, 0.9300, and 0.9275. Looking at indicators, both the 50-day and 200-day moving averages are trending downward, with prices currently below the 50-day MA, reinforcing the bearish bias. The RSI hovers around 45, indicating slight bearish momentum, while the MACD shows potential for a bullish crossover. For the immediate term of 1 to 2 weeks, euro to Swiss franc is expected to maintain its range-bound behavior with a slight bearish bias. The projected trading range is between 0.9300 and 0.9350. Technical indicators suggest continued pressure on the pair, with potential for a test of the 0.9300 psychological support level. However, the compressed trading range indicates building energy that could result in a breakout in either direction. Potential bearish catalysts include deteriorating Eurozone economic data or hawkish ECB commentary, while bullish factors could include economic weakness in Switzerland or broader risk-on market sentiment. Traders should closely monitor upcoming ECB speeches, Eurozone consumer confidence data, and Spanish inflation figures for potential market-moving developments. Looking at the 1 to 3 month horizon, euro to Swiss franc faces competing pressures with a projected trading range of 0.9200 to 0.9450. The broader technical picture suggests that the pair remains in a long-term downtrend, with potential for continued gradual depreciation. However, the recent consolidation could serve as a base for a corrective bounce if economic conditions in the Eurozone improve relative to Switzerland. Key factors to monitor include ECB monetary policy decisions and forward guidance, Swiss National Bank interventions in currency markets, relative inflation differentials between the Eurozone and Switzerland, and global risk sentiment affecting safe haven flows. These elements will be crucial in determining the midterm direction of euro to Swiss franc. In conclusion, euro to Swiss franc is currently navigating a period of consolidation with a slight bearish bias. The compressed trading range suggests building energy for a potential breakout, though the direction remains uncertain. Technical indicators favor continued downward pressure in the short term, with the critical support level at 0.9300 being particularly important to watch. If this level breaks, we could see accelerated downside momentum. Conversely, sustained trading above 0.9350 would suggest a potential shift in sentiment. Traders should closely monitor ECB communications and economic data releases for potential catalysts that could drive the next significant move in this currency pair. Please note that this analysis is for informational purposes only and should not be considered as financial advice. The analysis and opinions expressed in this report are based on publicly available information and are subject to change without notice. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment. Therefore, you should not invest money that you cannot afford to lose. For more information, please contact info@fxtech.com.